Hi, in this video we will see one more indicator which is known as moving average. So I'll show you how to plot that indicator on this chart. Click on this indicator option and select type moving average here. You will get at the top, select that. Okay, now you can see there is a line plotted here on my chart. I have taken Nifty. Okay, so here you can see there is a line. See, this is the moving average. This line is called as moving average. So what is this moving average is? See, this moving average is a simple moving average. So simple moving average calculates the average price of this selected range. Okay, so this calculates the closing price, average closing price of the selected range. So what is the selected range? Here if you come to this settings here on this moving average, you can see the length is 9, which means 9 previous candles. Okay, so it will take the price for the 9 average closing price of the previous 9 candles and gives you this line direction. Now I'll select 25. So why I have selected 25 is because I use 25 day moving average, but I use exponential moving average. I'll show you that also. Now this is simple moving average. Now I have changed it to 25. So this means it will calculate the closing price of the previous 25 candles. Okay, it calculates and shows the average price where the market was trading for the previous 25 candles. Now here you can see there are few candle bars here and there are few above this line. So how traders take their position is, whenever this candle breaks this 25-day moving average, then they will take a long position if it breaks on the upside. And whenever a candle breaks this moving average on the downside, then they will take a short position. Short position means selling. Okay, long position means buying. Now in this I'll show you the previous day's candle chart. Now you can see here the bar, this candle bar has been trading below this moving average and it broken at this level. Once this level is broken, there was a huge green candle, which means there is too much of buying pressure. Then market started going up. Same way, if you see here, when market opened, it opened, okay, gap down, and it was trading below this moving average itself. It did not break this moving average, so it is a downtrend day. And I'll show you one more example. Again here you can see once this line was broken, then it was an uptrend. But here if you see, this was broken, again it tried to break and go above, but it did not close above this line and it came down. See, all these indicators are not 100% accurate. These indicators, even if it gives 50% accuracy, even 50 times out of 100 times, even if it gives you 50 times correct signal, then that is enough for you to make money in the market. Okay, so you should not completely rely on this indicator itself. You should use all your analysis and then take a position. Now I'll show you one more example. Here you see it was trading below, and once this line was broken, then it gave a huge uh, green bar, which is like too much of buying pressure, and it closed above this candle. I'll show you one bearish trend. Okay, yeah, you can see here this candle. See, this was on 3rd of February. Okay, here you can see once this line was broken, this moving average was broken, it immediately came down and it was not able to go and break this line again. So it tried, but it could not go, and it broke down again. So same way, see, same thing happened here also. Once this is broken, it did not try to go and touch this line, it came down. So most of the time it will touch and it will fall. If it is not able to break that line, see here it went. This is again a fake break breakout happened here. Okay, so this is how it, I told like this line, this indicator will not give under, not just this indicator, any of the indicator will not give you 100% correct signal. Okay, but even if it gives 50%, that's more than enough for you to make the money. Here if you see, it broke on the upside and it closed a big green candle, but again it came down and it closed below it here, and again it broke, and again it closed here. So this is a kind of fake breakout. This entire day it was a fake breakout. But here if you look, the previous day it was trading below this line, it could not go up, then again it came down. Here it again tried to break this line, and again it closed in a red candle. Okay, so now what is this 25 day? Okay, I have chosen 25 because I use 25 day, and most of the people use 25 day only, because here I changed it to 25, right? From 9 I changed it to 25. Even if you can put 50 also, or you can put 200 also, which means 200 day moving average. So 200 days previous candles it will be taken, 200 previous closing of the candle it will be taken. Now why I have changed it to 25 is I am doing a intraday trading. So in intraday I have chosen 15 minutes candle. So for 15 minutes candle, if I choose, there are total 25 to 26 candles only. So from 9:15 if you take till I'll close it by 3:15. So I've taken only up to 3:15, which is equal to 25 candles. So I've taken 25 here. If you change this to daily time frame, okay, so I've changed it to daily time frame. Here you can see, if I have to trade or if I have to invest or something using this moving average, what I will do is I'll change this to 50 day or 20 day or 200 day. Let's take 200 day. So which means this price is trading now, the price which is trading currently 16,793, this price is trading below the 200 day moving average price, which means this price is trading below 200 days closing price. Okay, here you can see, this. Okay, so when did this cross? This crossed here after this fall of COVID crash. Market crossed this level here. Here you can see, when did it close? On 20 July or somewhere plus or minus 1 or 2 days, and it again tried to break this 200 day level. Okay, but it could not break. Again it went up, again it tried to break, and it could not break. Then after that it was only at the uptrend. Again it came here, could not break, went up, could not break here, and here finally it broke. When did it break? 24th February it broke. This is because of this Russia and Ukraine war. So due to that there was a big gap down in the market, 5% fall on one single day. So at that day it broke this level, and now the price is trading below this 200 day moving average. If you ask me, if I wanted to take a position here, when I will take, if I have to invest, when I will be investing is, if I am bullish, then the price should close above this line. So where is this line currently? 16,911, 911 or 920, 926, we will keep it as 920 only. So whenever the price crosses 16,920 and closes above 16,920, I'll wait for 1 or 2 days. If the price is moving on the upside and if it is not breaking this 200 day moving average, then I will consider going long. Okay, then I will consider buying or going long. Then whenever the price breaks this 200 day moving average and closes below this 200 day moving average, then I will exit from my position. Even if it is in loss or in profit, I will not keep it, because here the trend is completely changed. Now it is going to go down. Okay, so I will exit and wait for the next trade. Okay, now this is moving average. I will be using exponential moving average. So what is actually exponential moving average? I'll show you here. Okay, exponential moving average, you just have to put uh, exponential. Okay, moving average exponential, select this one, and I'll close this moving average. This is in 9, I'll change it to 25. Okay, this you can change it. If you want 50 also you can put, you can 25, whatever the period you want to put, you can put. So I use exponential moving average 25. That's because 25 period candle. So what is this exponential moving average is? This exponential moving average is also called as a weighted moving average. So this will calculate the price, the recent price. It will not take all the prices. It will take only the recent closing price. Okay, I'll show you what is the main difference. See, if I'm using this moving average, okay, now there are two moving average here. Okay, you can see two lines. I'll change this moving average line to okay, I'll change it to red. Okay, now this red is simple moving average line and this blue is exponential moving average line. I'll change it to 25. You can see the difference. If I have taken this exponential moving average, then my exponential moving average is showing that it is crossing at this level itself at 10:45 on 28 February. It is crossing this level, but this simple moving average, it is giving me the signal, buying signal, only at 11:45 once this big candle is closed above this level. Or you can consider this also 11:15. Once this is closed, then it is giving me the close the buying option. So this exponential moving average is, when compared to the normal simple moving average, this exponential moving average is little bit powerful. Okay, for taking any trade, this exponential moving average will give you the edge, which means you can consider this as one of the indicator for you to buy or sell. This, because this calculates the price, there is no much difference. Okay, in both of this there is no much difference, but what is the main difference here is this exponential moving average will calculate the price of previous 25 candle, the recent closing price, not the simple moving average like how it takes the overall price and calculates. Not like that, it takes only the simple only the previous closing price. Okay, you can use both. You can use EMA or MA, moving average or exponential moving average, is it left to you, but I use moving average. Okay, so this moving average, now even in this moving average also you can go for 200-day exponential moving average or 50-day, whatever you want. And how to use this exponential moving average? Let's say I'm using 50-day moving average and I'm taking Reliance share. This you can use it with stocks also. Now I want to use it for a longer period. Let's say I want to invest in this. Now here the price had broken my 50-day, is it 50? 1 minute. Yeah, it's 50. So my price has broken this 50-day moving average. It closed above the 50-day moving average on 28th itself. And on sorry, I have taken 1 hour chart. I'm very sorry. Okay, 1 day chart. Okay. Yeah, sorry. So it is not closed above my 50-day moving average. Once it closes above my 50-day moving average, I will wait for 1 day or 2 days, so that again if it is not breaking this level, then I will go and buy Reliance stock. And whenever this touches this line and closes below this line, then immediately I will exit from the stock, whether if it is in profit or loss. Okay, I'll give you one simple example here. You can see this 50-day moving average has broken here. Okay, on 11th August. After that it was going up. It did not touch this level. When did it touch? It touched and closed below this level on 3rd November. But again it was a fake breakout. Again it went up and again it came down. But here as per my rules, I'll have to close it here on 3rd November. So I have taken a trade on 11th August at what price? Let's say 200 rupees, 2100 rupees I have taken this trade. And when I closed it for 2485, which is almost 480 points. Okay. So sorry, 380 points. So 380 points in what, 3 months? Yeah. So this is how I do investing, but I use 200-day moving average because this will give me a lot of time to stay in the market. See, whenever this broke, I take. After this, it did not break this line itself. It was going up. So finally, it closed here. So if I would have taken a trade there, then I should close it here as per my rules. Okay. So along with this, I will include super trend also for my intraday tradings. I'll explain that in a different video. I've already explained in my previous video what is super trend is. Then now I will mix both super trend and EMA. I will not use any other indicators. Okay. I just use this EMA and super trend for my intraday trading. I will not be using any other indicators because there are thousands of indicators. If you start using this, I'll show you. See, there are thousands of indicators. If you start using these indicators, you will be using it. There is no end for this. Okay, there is no end. So I just restricted myself. I'll use only EMA and super trend. I'll show you how to mix both this and take a trade in my upcoming videos. Okay, thank you so much.